Despite the long-anticipated market correction that started last week, these three defensive stocks actually bucked the trend and rally up higher. And with their average dividend yield ranges from 2 to 3%, which is very decent. So let's get started to see how we can benefit from them by identifying some of the low risk entry and right up trend. So let's get started. The first stock is MDLZ Mondelez International. So you can see that there is a huge structure right here and that go all the way back to 2020 last year. And here is the breakout, sign of strength rally with the backing out action, tested the whole accumulation structure, and then it actually started this uptrend. So let's just pay attention to the recent price action. So you can see that right after this two leg uptrend, there is a correction or a simple pullback, just a one leg down and sort of forming a rounding bottom type. So in terms of the volume, we can see that it's pretty much normal apart from there is a spike of the volume on this day. And that I think is tend to break down, but is pretty much form a spring type of the scenario. It's just a fake breakout and then followed by a very quick recovery up, followed by another test with a decreasing supply, and eventually just sort of moving its way up and test the previous swing high level. So last Friday, there's actually a breakout right there. So it happened right there, and although the close is just above the resistance level, we can see that there is a rejection tail. So you can see this is a rejection tail, despite it's not that threatening, but still there is some form of the rejection. And let's compare these two volume. So you can see these two bars, especially the last bar here is a very small spread bar with a bit of the rejection tail, while the previous bar is sort of like a big spread. And while their effort behind or the volume is very similar, so that actually suggested that there's presence of supply on last Friday's bar. So what I actually anticipate is some kind of the pullback. So ideally, I would like to see some form of the pullback, maybe for a few days, and just sort of forming a shallow type of the pullback before you can just trend higher. So any type of the breakout signal, or if you can catch the reversal right from this pullback, and probably using the hourly time frame or the smaller time frame that you prefer, I think that will form a nice reward to risk ratio. All right, so this is Mondelez, and I think it's from a very bullish structure. Okay, so before I jump to the next stock, I would appreciate if you can just like this YouTube video and also follow my channel if you haven't. So just subscribe it, and that would mean a lot to me. So let's get back to the video, and the next stock is PG. So Procter and Gamble. So you can see that Procter and Gamble actually have a very bullish accumulation structure as well. So it's from this pretty much long-term view from last year. So you can see there's a sort of a topping formation last year, followed by a pullback or a correction. Now it's worked its way back to test the previous swing high level. So last Friday actually just further just propel up further, and I think there's a high chance that it can just go all the way to test the previous swing high level as a resistance at about 142 or 143. So that's the immediate resistance level. However, because right now the price action is a bit stretched, so it's overstretched, and we can see that there is a bit of the climatic up move and followed by probably increasing of the volume. So this is some form of the pattern that I would not willing to chase. So what I would like to see is wait for a pullback. So you can see that like this. So this is one leg up and followed by a pullback or a consolidation. So we will just trade within this sort of the consolidation pattern, whether you trade the first breakout or whether you can catch some form of the reversal signal in a smaller time frame. So what I would like to see is some kind of the consolidation pullback, and then we can just probably try to from our position and enter some of the long entry and with a decent reward to risk ratio, and anticipate the price to at least test probably this swing high level or even higher if you can just commit above and hopefully just shoot up. All right, so this is Procter and Gamble. I think it has a very nice and bullish structure. So the last stock is KO, so Coca-Cola Company. So this structure is very similar to the PG, Procter and Gamble. You can see that there is a probably a swing high level waiting or the previous resistance level. So last Friday, actually the breakout initiated on the Wednesday. So Wednesday breakout from this localized structure, and subsequently there is definitely going to trend higher and test the swing high level before a meaningful reaction come. So let's just focus on the price action alone. So you can see after this sort of like a grinding up action breaking out, there is a acceleration to the upside followed by another test. So this is sort of like a backup action. So we do have a structure or accumulation structure right here. Once it's breaking out, coming back to have a test to confirm that this accumulation structure is valid, and subsequently right after the test is just kind of hang around for a little bit, and then it just acceleration and break above and come in above this immediate swing high level. So you can see this is a kind of a bullish momentum bar that comes with a aggressive demand that push price up and also come in above. So next day, although there's a attempt to just have a profit taking and get back in, but eventually it's still close at a high. So this is a very bullish structure. So right now, definitely, I don't think it's right to just jump in and chase price. So what I would like to see is whether you can just sort of touch the high and then form a pullback. So what we like to see is some form of the pullback, and we can trade either the reversal signal or maybe we can trade the breakout type of a signal. So just wait for a few more days and to see what happened to KO. So overall, it's a very bullish structure, and you can see that in terms of the relative strength compared to the market, the SPX, S&P 500. Despite the correction, the KO is just rarely up and still outperform the market. So this is quite a nice defensive stocks, and all these three also offer quite a decent dividend yield range from 2 to 3%. Okay, so that's all, and hope you enjoyed the video. If you'd like to learn more about other trading opportunities, check out the video that showed on the screen right now, and do remember to subscribe to my YouTube channel and also to join my newly launched Telegram group channel for the ad hoc market update, and you can just interact with me and other traders as well. All right, so I'll see you next week.